Alright everyone, Cowboy Trades Sir, welcome back to the channel for another update on Bitcoin and the markets. So the Fed has delivered another fatal blow to the markets after Jerome Powell concludes his speech today at Jackson Hole. In today's video, we're going to talk about what were the main takeaways from Powell's speech today, how the markets are already starting to use this information to price in the next 25 basis point increase in September, what that will mean for the markets, and of course we're going to take a deep dive into what's happening right now in Bitcoin, the cryptocurrency markets, and also the infamous CZ Binance situation, which seems to be circulating everywhere right now. Let's dive right into the content. So let's start off with the news. Today, Jerome Powell had his yearly speech over at Jackson Hole, and here were the main takeaways. Number one, inflation is still too high for the Fed. Number two, Powell was dismissing all the calls to raise the Fed's 2% inflation target. He still insists that the inflation rate needs to come down to 2% and they will not raise that target. Number three, the Fed is prepared to raise interest rates further if necessary, and they also intend to keep borrowing costs high until inflation has come down to their target. Now, I want to briefly comment on his points about keeping the interest rates high and keeping borrowing costs high until inflation is coming back down to that 2% target. This will be very brief because we have talked about this topic before over on the channel. As you can see, if we are coming over to the CPI index, for the next 6 months, we are going to be measuring the rate of change on the CPI year-over-year index from a flat basis. As you can see, month over month, CPI is still coming up. This is why we're seeing CPI year-over-year start to take a turnaround, and month over month is still increasing. So based on this fact, we do believe that inflation year-over-year is probably going to continue on this trajectory and end up anywhere between 5 and 6% year-over-year. So we think inflation, headline inflation, is going to be coming back, and as you can see, little progress is being made in the core CPI index, which is still making new all-time highs, just like its headline inflation counterpart. In terms of his other point on keeping borrowing costs high, there's a bunch of charts that we can dive into. I just want to look at this one over here on the net percentage of domestic banks tightening standards for credit and industrial loans. If we come over to TradingView, we can find this exact chart and draw some technical analysis on it. If we are overlaying this indicator known as the US recessions indicator, what this basically just does is plot these vertical green bars on our screen whenever the US enters a recession. And you can see for one reason or another, whenever the net percentage of banks tightening standards for commercial loans comes up to this 50 to 54 level, for one reason or another, like I said, we always enter a recession. This happened in 1990. This happened after tightening standards increased after the 2000 crisis. This happened after the 2008 financial crisis. Every single time, you can see over here, this was a slightly different reason, as I'm sure you all know, in 2019, but banks tightening standards did follow as a result of this, and at this moment in time, we are at 50%. And this chart has 100% accuracy of recessions following after banks tightening standards exceeding 54.66. So the fact that we're seeing credit conditions continue to tighten, and the fact that we're seeing the CPI indexes, the fact that we're seeing CPI month over month come up every single month without fail, we do believe we're going to continue on this trajectory. For core CPI, if we continue on this trajectory, this is just an estimation, but we could potentially be around about 4.33% by the end of the year, nowhere near the Fed's 2% mandate. If we continue on the same trajectory for headline CPI, we could see, like I said, about a 5 or 6% year-to-date CPI. Like we were talking about in one of our recent videos, inflation bottoms in June, we were letting you know that the year-to-date CPI index was going to bottom out in June. The next reading, we were going to see an increase. If you didn't know, the next inflation data we have coming in for the CPI is going to be at September the 13th, just in time for the next FOMC meeting on September the 20th. So we do have time for new economic data to come in regarding inflation, and if we do see this come up again, like I had been predicting, we're going to see the interest rates go up, we're going to see tightening standards go up, and it's not going to look good for the economy. Now let's talk about how the markets are reacting based on Powell's speech today. If we come over to the Fed Fund futures, you can see these are rising today on the weekly time frame. These are pushing up to new all-time highs if we do have a close up at these levels. On the daily time frame, we have been here for just a day or so before nuking, but basically we are pushing up to new all-time highs on the Fed Fund futures, implying that the markets are just starting to price in higher interest rates. Now, they have only just started pricing these interest rates. If we do come over to the Bloomberg terminal and look at the FOMC activities, you can see at this moment in time, the markets are associating a 21% probability of an interest rate hike in the next meeting. The Fed keeps on doubling down on this, and the markets just keep on disbelieving the Fed. The Fed has religiously come out for the past year and said we are going to continue raising the interest rates if inflation is at these high levels, and the markets keep on saying, we're calling your bluff. You're not going to raise the interest rates further. And then they raise them further and they say, okay, that's the top. They're not going to raise them further. Then they raise them further and they say, okay, you're not going to raise them further. And they raise them further. This has been happening for the past 12 months. The Fed is saying we're going to raise the rates, and everyone on crypto Twitter, everyone on crypto YouTube is saying there's no way the Fed can continue raising the interest rates. They're bluffing. They're not going to raise them further. And boom, the Fed continued to raise them further and further and further. So for some reason, every single time we have some new Fed commentary and the Fed comes out and says, oh yeah, by the way, you already know this, but we're going to continue raising the interest rates. Everyone's like, what? The Fed is going to raise the interest rates further? Who could have possibly thought the Fed would raise the interest rates further? Well, anyone with ears who's been listening to Fed commentary would predict that it's going to move further, because this is what they've been saying, and they've been saying this for the past 12 months. And if you've been listening to the Fed, they've done exactly what they've been saying they're going to do, and the markets just keep on not believing them and keep on saying there's no way they're going to raise them further. So this is why we're only starting to price in the next 25 basis point increase as of the past hour or two. In fact, if we come over to the implied policy rate curve, you can see this is where we currently are at this moment in time. This next data point over here is for the September reading, and the next meeting after that is all the way up here in November, as we do have a gap from the September to November meeting. Now, it's a little bit hard to see over on the screen here. Basically, you can see this is 0% probability. The markets are not thinking we're going to raise them further at all. This is a 1, or in percentage, 100% probability of having an interest rate hike. And at this level right now, we are literally sitting at a 21% probability of an interest rate hike, meaning if we do have an interest rate hike, 21% of it's priced in, 79% of it is not priced in. So there are two situations right now that can happen for the market. Number one, we start pricing in the next interest rate hike, which will mean the dollar will go up, bonds will go up, equities down, crypto down, all within the next month up until the next FOMC meeting. Or situation number two, the markets, once again, I think this is probably what's going to happen. Markets will think the Fed is bluffing. The markets will not break down significantly. Maybe they'll go up, maybe they'll go sideways, maybe they'll go a tiny bit down, but we won't fully price in this interest rate hike, as the markets are once again hoping that we are going to pause or cut. And in that case, the next major breakdown we could see is on the next FOMC meeting on the 20th of September. Now, how have the rest of the markets reacted following Jerome Powell's conference? Well, I just want to show you the 2-year bonds very, very quickly, which are pushing up almost into new all-time highs. Once again, these have had a very positive response based on the conference today. If we are coming over to the yield curve, you can see this is coming down significantly. As I said in a recent video, I kind of think we are coming towards the bottom of the yield curve, and once this starts to retract and push back up to the upside, this is when recessions have always followed in the markets. As you can see, every time the yield curve inverts and then pushes back up, we see recessions follow. In terms of the DXY is up today, up this week, and up this month. As you can see, we have recently bounced on this huge box, which was resistance for the past 8 years. In the past 8 years, the DXY has had 3 major tops, and they've all been within this resistance box. And recently, as of 2023, we've come down into this previous resistance box, and it's looking like, at least in the immediate short term, we're holding it as support. Now, let's talk about what's happening in the cryptocurrency markets. Now, in terms of the total cryptocurrency market cap, as you can see, like we've been talking about last week, we did have that weekly counterbody close underneath the 200-week moving average, underneath the EMA ribbons, bull market support bands. It is not looking good right now for the total cryptocurrency market cap. We are at the neckline of this massive, massive pattern right now. And there's a few different price targets. Number one, you can see this is a very, very clear M pattern price target. This one right here is a little bit more conservative, with the M pattern taking us down to 749 billion. You can also see there's a very, very clear head and shoulders price target all the way down at 700 billion. So it's not looking good for the total cryptocurrency market cap, and also the altcoin market is looking exactly the same. We are very, very close to new bear market lows. We are only about an 18% move away. You can also see over on the total altcoin market cap, whether you're looking at this as an M pattern, whether you're looking at this as a potential head and shoulders, the price target is the same. It's all the way down here at new bear market lows, 316 billion, or basically a 40% drop to the downside. Now, I want to talk about what's happening with the infamous Binance right now, because there's a lot of talk happening right now regarding Binance. I'm seeing a lot of talks on my Discord, a lot of talks over on Twitter and YouTube, where people are talking about a potential Binance situation in which Binance has supposedly taken out a loan with BNB being the collateral and 220 to 212 being the liquidation level. Now, a lot of people are speculating that Binance is very, very close to being liquidated, and because of this, they're going to start selling their 563,000 Bitcoin to make sure that they don't get liquidated and they can uphold the BNB price. Now, the problem with this is, every single time I see this rumor circulate, I say, okay, this is a very bold claim, right? Surely they're going to post something like this and you're going to come down in the comment section and they're going to say, this is my source. These are the wallets that I've dove into. This is some information based on the loan collateral which I'm talking about and I'm speculating about. But unfortunately, a lot of the time people say stuff like this over on crypto Twitter and you're like, okay, where's the source? There's no source. So at this moment in time, I've done my utmost best. I've spent quite a few many hours going through Binance's wallets. I've been looking at wallets associated with this. I've been looking to either confirm or deny this supposed rumor, and there's no solid evidence that this is actually the case. Now, I'm not saying it's not the case. What I am saying is all of these people who are sharing this situation are not sharing any sources, and to me at least, maybe I've overlooked something, but there's no glaring evidence of this being the case. However, the Binance situation is not all peachy. As you know, we have been reporting on what has been happening with Binance. Binance has been getting hit with lawsuits left, right, center. Regulators are going after Binance US. Different countries are, making Binance illegal, etc. MasterCard today just stepped down from their Binance card partnerships. I believe it was a month or so ago, Binance got accused of insider trading, and according to Bloomberg Finance, CZ has lost 47.5% of his net worth in only the past month. Now, this is totaling a loss of 24.2 billion. Basically, about a month ago, he was worth just over 50 billion. And at this moment in time, he's currently worth 26.8 billion. However, the BNB price has only gone down about 14 to 15% this month. So something isn't adding up at this moment in time. Regardless, it's not looking good for Binance at this moment in time, which takes us into the cryptocurrency analysis, because Binance FUD has previously had some severe implications on the Bitcoin price, and within the past 24 hours or so, Bitcoin is not looking too good since this news came out. Regardless, Bitcoin has not been looking good for the past few days or so. If we do come over to the weekly time frame to start off with, you can still see, like we've been talking about, Bitcoin has closed underneath all of these important levels that we've seen. This week, we only managed to push up to 26,800. You remember in my previous video, I was actually saying I hope Bitcoin manages to push up a little bit further, because I would like to be trading and shorting from a position of strength. But right now, Bitcoin is looking extremely weak. On the weekly, we're getting continuation down. On the monthly time frame, especially considering we have a new monthly candle coming in exactly 7 days, I think it's very likely the stochastic RSI on the monthly time frame is about to have a bearish flip, and we've previously talked about how this has extremely negative implications for the price in the immediate short term. On the daily time frame, what I find interesting is the price is actually breaking down, but the oscillator is heading up. This is a classic case of bearish divergence. If we are clearing up the chart and just looking at the daily time frame, it's a little bit ugly because it doesn't really look like there's any clear trend lines in this trend at this moment in time. If we are just looking at this for the market structure itself, you can see we are currently forming a potential bear flag at this moment in time. So in the higher time frames, like we've been talking about, Bitcoin is absolutely not looking good right now. Remember, we also have a price target of this massive head and shoulders all the way down here at 18,400. one step further to the downside of the CME gap that we need to fill down here at 20,260. If we do come over to our next chart, as you can see, this could also potentially be a massive M pattern breakdown. We are still sitting at this huge support level. So like I've been saying in my videos, whether we break up and fill this CME gap round about 28,000, retest some important levels like the 200-week moving average before heading down, or whether we just head straight down, it doesn't make a big difference to me. At this moment in time, I am on the sidelines. I'm waiting for a position of strength. I really don't like to say this because, as you know, if you do watch my videos, I'm not one of these YouTubers that just draws something like this and says, hey, if we bounce from this level and go up, then we go up, and if we come down from this level and go down, then we go down. And then one of these situations happen and they say, hey, exactly as predicted, just like we drew out. Even though they drew out two different situations, I much prefer to say, hey, based on the analysis, based on the economic data, based on everything we've looked at, we think the most likely path is to come down to this exact level, and that is our prediction. But at least as of right now, everything's very 50-50. In the higher time frames, we should be coming down. In the lower time frames, there's still a likelihood that we could just lollygag a little bit around these levels. And like I said, because of that, I'm out of the markets. I need to see a position of strength. Either we come up to 27,600, 28,000, and we get to short from a position of strength, or if we start to come to the downside, if we start to break to the downside, we can start looking at positions of strength from bearish retests such as this on the M pattern breakdown, potentially a retest of some of these levels a little bit later on, etc. At this moment in time though, there are really no trades that I'd be looking for. I'm waiting for a position of strength, and as always, I'll let you know when I do see that position of strength coming into the markets. So whether we break up or down in the immediate short term is yet to be seen. I'd personally like to see us come up and fill this CME gap before my next trade. However, everything's looking pretty shaky right now, and it's really 50-50 to me whether we come up to 28 or come down, or whether we just start coming down to 20,000. Either way, whether we come up or down or just come down, I think we're going down to round about 20,000 within the next month or so. So for today, my friends, that is all I've got. As always, if you do enjoy my content, make sure to smash that like button, leave a comment, share the videos with your friends. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. It's been your boy Cowboy Trades. I'm out. Peace.